So the Fed raised prime to 7% yesterday. Not much of a surprise. I think we were all anticipating three quarters. Hopefully they would go down to maybe a half. But so that means that rates are up, or prime is up 3.75% since the beginning of this year. The general consensus is that the Fed will raise rates at least 4.5%, maybe even 5%. So we still have a little bit of runway to go. That being said, the good thing is that Jerome Powell did mention that he will be relying more on the market rather than the data to gauge inflation, because the data is still saying that inflation is high and it's not going down, and then the market's kind of showing obvious signs of softening. So that's good news in terms of then scaling back on increasing rates. Now, what does that mean for interest rates for multifamily and commercial? Great question. Rates are still going up. So, there were a lot of lenders, brokers, whoever saying at the beginning of the year, oh, it's built in, it's built in. So maybe that was the case previously. That is not the case now. So I am seeing lenders, yes, they have been raising rates in anticipation of the increase for the last few weeks. But guess what? I'm still getting notifications that they're raising rates even more. So that means that you should continue to expect to see interest rates rise. We are not getting a break as of now, or at least today, the day after, from lenders raising rates, even though they've been raising them up to this point. The general information that I'm receiving is a lot of lenders are just like halting business. This is why they're raising rates. In fact, they are raising rates more than they actually need to. Why? Because they want to slow business down. They want to slow down. They don't want to give as much debt. They want to keep liquidity. So there are still loans out there. There are still solutions out there, but I will tell you it's a little bit more dicey right now. There's more lenders backing out of deals. There's more lenders just making up guidelines out of thin air because they don't feel comfortable. If you locked in an interest rate, you better close that loan within your rate lock period, because they are not going to honor it. I don't care what they tell you. Do not assume that they're going to honor your rate lock. Get that thing closed within your rate lock period. Otherwise, there is a very high likelihood, if not almost 100% likelihood, that your rate's going to go up. So this is just what we're seeing. Lenders are kind of like dating right now, right? Like they're dating this person, they're dating that person. They might cancel the date next week. They might cancel your loan. Like, this is very real. So like I said, if you're locked in, you better just do everything they say within the time that it needs to be done and get that sucker closed before rates go up again, because lenders are feeling very moody right now. If you have any questions, always reach out to me. I'm happy to run numbers, let you know where we stand, let you know what we can do. There is still some bridge financing out there. It's not pretty. It's like 9 to 10%, but it exists. There are some market rent programs. There are some other creative things that we can do, but it is more expensive across the board.